So welcome to the lesson for management accounting costing. And today we're going to start from chapter number 8. And this chapter we have process costing. Now, the process costing is a very new thing to us. And in the exam, normally we see a question from this chapter, not for like a big question like 10, 15 marks, but 5 to 7 marks question normally come from chapter number 8 and 9. So there is a combination of these two chapters, chapter 8 and 9. And these two chapter combined basically makes the question. So let's talk about the process costing first. What is process costing? Now, the process costing is the costing method where we have to consider the unit cost that is not completed yet. So in the process, for example, let's say if we try to print a paper and if the printing takes a little bit long time, so let's say you click on the print and the system said please wait. Now if someone asks you how far you are, we said like we are in the process, so that means we are doing something. So when we manufacture any product, when we produce any product on the system or from the factory, from the machine, some of the product is always in the process. So when you calculate our closing inventory, let's say our year is end 31st of our year in end is 31st of March, but doesn't mean on 31st of March we will stop all the machine so that we can calculate our closing inventory. We don't do that. So what we do, rather, the process is still going, and top of that, anything inside of the machine, we calculate how many unit we're expecting inside of the machine. Let's say, for example, let's say we have, let's say for example, we have a machine, and it could be any machine. Let's say we make bread. We put all the flours. So we input the flours inside of the machine, and the output is the bread. So our raw material is the flour. So we make bread from flour. So let's say the flour, water, eggs, everything we we input in the machine, and this machine produce the bread as the output. Now let's say we are in the year ending 31st of March, could be any year, 2020, 19, whatever it is. So when our year is end, some of the product is still inside of the machine. So basically this is the raw material that is still on process. Now there are few things here. The first thing, inside of the machine, whatever it is, we call it raw material. Raw material. Inside of the machine, whatever it is, we call it raw material. Top of that, some people are working so that the machine is working. So we need the labor. So we said the labor cost and the overheads, light and heating, everything, the overhead. So in the process of making one unit, there are three things involved. One is the raw material, one is the labor cost, and the overhead. These three things together, the combination of a unit cost. Now, if someone asks you what is the inside of a unit cost, you said the raw material, the labor cost, and the overhead. This is the three things inside of a unit cost. Now, when is our year end? Some of the product is still inside and some of the unit is completed. For example, up to 31st of March, we have completed 5,000 unit. So let's say we have make 5,000 breads. So 5,000 unit we have completed, and some raw material already or is still inside of the machine. So this is basically the processing the raw material, and this process will be completed maybe today, tomorrow. So every day there is some new output coming from this machine. So on 31st of March, I went to the factory and I checked the machine and I estimated what is the amount of unit inside of this machine. For example, let's say I have 10 kilo of flour here, 10 kilo flour. Now I understand to make one bread, I need 1 kilo flour. So 10 kilo flour is equal to 10 unit or 10 equivalent unit, EU, 10 equivalent units. So whatever I have inside of the machine, that is equivalent to 10 unit. I cannot say it is a finished good because it is not completed yet, but it is still on the process. So when something on the process, we called it equivalent unit because it is not done yet. I cannot say it is the completed unit, so I say it is the equivalent unit. So all this thing we're going to see from this chapter, everything what is inside of the machine. So what is in the process, we're going to see all of this from this chapter and the next chapter. So I hope you have an idea now. Sometimes we called it WIP, work in progress. WIP, work in progress. The work is on progress is called work in progress. So anything is still working, is not done yet, that is called WIP. So this is the first thing we're going to see from this chapter. So all this thing calculation we are doing, that is for the process costing. Now it is very possible the machine, let's say sometimes we said if we mix the flour now, it will take another 45 minutes, or let's say another 2 days to complete one bread. So the machine takes 2 days to complete one unit. Now if I ask how much is completed now, so inside of the machine, how much is completed? So you can say it's only 50% done. So still you need to wait another 1 day or 2 day to make sure it is done. So we can say 50% product is done, 40% is done. So based on the estimate, you said maybe 50% work is done inside of the machine, but still it is not done. It's still 50% left. Sometimes we said it's very close. So 90% work is done, only 10% left. So the question will tell you what is the completion percentage for the work in progress. The question will tell you, is it 80% done? Is it 50% done? Or is it 90% done? If the question tell you it is 80% done, so if we have 100 unit, we multiply by 80% and we take 80 unit. So equivalent to 80 unit. The reason is 100% is not completed yet, so only 80% done. So the product is 80% completed. We can take only 80%. So this is called completion, the percentage of completion of the WIP, that is work in progress. But how much is completed the product, we have no idea. So the question will tell us how much is completed. So you don't have to worry about it. The next point I'm going to discuss, there are few things that is happen during the process time. So the first one is called normal losses. Nor normal loss. Normal loss. What is normal loss? That is expected loss. Normal loss is the expected loss. For example, if I said, if I input 10 kilo flour in the machine, half kilo flour is always wasted. This is the normal loss. This is the normal process. So if I said, if I bring 1 kilo of the milk, I can make 10 ice cream, because few milk is always wasted when I put in the cup. So some milk is fell down, some milk is basically more dry. So for some reason, when you use the raw material, something is always waste. Let's say, even if you make the juice for the orange, maybe like sometimes you need two orange to make 1 glass of juice, sometimes you might need three orange to make 1 glass of juice, sometimes you need little bit less or more. So we have some estimate. We said 10% we have always lost. So if we already know 10% material will be waste, this is called normal loss. So if I put 10 kilo of the flour, the output will be 9 kilo or 9.5 kilo. So there will be something waste during the process. There will be some waste during the process. So if it is expected, if we know it already, that is called normal loss. That is called normal loss. The loss we already know, that is called normal loss. So we said normal loss means expected loss. Expected loss. So the loss I'm expecting during the process. The next one is unexpected loss. Unexpected loss, or we called it abnormal loss. So the first one is normal loss. The next one is abnormal loss. Abnormal loss is like when the loss is more than my expectation. So let's say my expectation was 5% material will be waste, or 5% unit will be waste. So the output will be 95%. But the actual output is less than that. The actual output is less than 95%. It is 90% or maybe 94%. So when my actual output is less than the expectation, that is called abnormal loss. For example, if my expectation was 90 unit and if my output is 85 unit, that means abnormal loss is 5 unit. And the next point is abnormal gain. So let's say my expectation was 90 unit, but we make 95 unit. So we made more unit whatever I have expected. So if I make more than what I have expected, that is called abnormal gain. So three things we have learned: normal loss, that is expected loss; abnormal loss, that is basically the loss is more than expected; abnormal gain, that is basically more than my expected loss. For example, if I said my loss was supposed to be 10 but loss was actually 8, so if my loss is less than the expected, the difference is the gain, that is called abnormal gain. Three things: normal loss, and abnormal gain. So let's go inside of the chapter now and let's have a look how exactly all of this work in the process costing. Now this chapter could be tricky sometimes, so make sure you spend enough time for the practice for process costing, because we're expecting some question in the exam from this chapter. So let's go inside and let's have a look what we have. Now, there is some explanation that we already calculated. We already explained. The first thing we have the cost per unit. This is the formula we have to remember. This is the formula we have to remember, that is cost per unit. So cost per unit. So cost per unit. This one we have to write it down. Let's see here. Just make it right. Okay. So something wrong with that. Okay, let's say this is cost per unit. This is the cost per unit. This is the formula you have to remember. The formula here is process cost minus scrap proceed from the normal loss. So for example, obviously, if we have something that is a waste, and if we can sell it for any money, that is called scrap proceed from the normal loss. For example, let's say sometimes in Tesco or Sainsbury, they said that is reduced to clear. So some of the product may be damaged, some of the product maybe is not fully completed. For some reason, they reduce the price because it is not like the completed good. So if something we sell and get some money, that is called the proceed from the scrap value. Scrap value means I cannot sell this one as a completed product, but still there is some value. For example, let's say you have a computer and the computer doesn't work, but there is a mouse, there is a keyboard, there is some other parts that you can sell. So even it is not the completed unit, but there is some value of the product, so we called it value from the scrap. So whatever you can sell it, this is the scrap value. So this is not actually your loss, so you will getting the money by selling it. Of course this will cover some cost, so this is not part of the cost. That's why we have to deduct it. So we said process cost, let's say the total cost is 100, and whatever is wasted, whatever is the wasted, whatever is the loss, if there is some value of that raw material and we can get some money from that, that we have to reduce from here, we have to minus from here, because this is the actual actually it's not called cost for the business, because this money will be covered by selling it. The next one, we have the unit output. This is the actual output, how many unit we have produced. Let's say we have input 1000 kilo, and how many kilo unit is produced. So what was my input, what was my actual output? So this is the actual output. Obviously from here we have to see how much is the normal loss. Now let's say if the total input is 100 unit and 100 kilo, and the normal loss is basically 10 kilo, so basically 90 kilo is my actual input and that will give me the cost per unit. So let's say if I produce 90 unit and the cost is 100 pounds, so 100 over 90, that will give me cost per unit. So you have to remember this formula. So process cost minus scrap value from the normal loss. On the bottom, we have unit inputs minus the normal loss unit. That will give you cost per unit. Then we have losses, we have abnormal gain, we have normal losses, abnormal losses, then we have abnormal gain. So all of this we're going to see because we're going to practice some question, we're going to see everything from there. There is a process costing that will be exactly like the ledger account we have prepared before. We have to prepare a process costing, we'll see that as well. So let's go inside of the chapter and let's have a look how can we do that. So cost per unit of the output, again the same way you can do that. Total process cost divide the actual output. Let's have a look one of the example so that we try to understand more from here. So let's have a look one of the example, activity 1. In activity 1 the question said there is no loss. Activity 1, process account, no loss. So in this question, we are not going to see any loss. So let's have a look. The question, it says input to process 1. Now, process 1 means step 1. One product could take few steps to complete. For example, on the first machine, maybe I mix the bread. The next machine, the next process, we add water and eggs with that. Maybe process 3, the complete bread come as output. So that could be a different process or different stages involved to make one product. So when you see input to process 1, so basically they mean this is basically one steps or one process where we start doing we start putting the input. So let's have a look. We have the first thing, we have that input, and from the input, how many unit? 1000 unit of raw material. So we put 1000 unit of raw material. Then costing 40,000. So this is my cost for the raw material. Other cost, we have a labor cost that is 50,000. We have an overhead 20,000, and all output was transferred to process 2. You will see this thing or every single question. So anything is completed from process 1, it will go to process 2. So once the first machine job is done, it will be moved to the next machine. So process 1 is the step 1, process 2 is the step 2. So they're asking what's happening in the process 1 and how many unit you have to give to process 2. So basically all of this we are doing is like on the process. All right, so let's have a look. The requirement is saying calculate the cost per unit of output and complete the process account. Okay, so you can have a look 1 minute and try yourself, and you can say how much you're expecting the cost per unit, but we'll do it together anyway. So you can read the question by yourself, and just if you can tell me what you expect will be the cost per unit. But we have to remember the formula anyway. So the cost per unit will be the total process cost. So cost per unit. So cost. $110. Can you show the workings as well? By the time I'm trying to fixing my writing board, for some reason it is not responding. All right, very good. Very well done, Vinod. Very well done, Thidora. I'll just take a minute. So first we write the cost per unit, the formula. In the top, we're going to write total process cost. Total process cost. So total process cost. Total. All right, so we have the total cost. The total cost we have on the top, that is 110. If I added all of this, so 40,000 plus 50,000 plus 20,000. And on the bottom, we have the output, that is 1,000 unit. And if you make a divide with this, that will give us 110 per unit. So this is the cost per unit, 110. Cost per unit 110. Remember that even though the cost per unit is quite easy to calculate, but you have to remember the process account. The process account is process 1. So we are working on this account and ultimately will transfer to process 2. Process 2. The question says all output was transferred to process 2. So we will working on process 1, but after that we'll transfer everything to process 2. So let's have a look. The first one we have all this cost. Remember, all this cost will come here on the left hand side. All overhead, all overhead cost will come in the left hand side. The first one we have raw material that is 1000 unit and the cost is 40,000. Then we have a labor, the cost is 50,000. Then we have an overhead and that is 20,000. So all this overhead cost you will record on the credit side. After that, you move to what is the output for your process 2. Now, as the question said, there is no loss. That means we don't have any loss. So we input 1000 and output 1000 unit. So we give 1000 unit to the machine, and actually the machine gave us 1000 unit back as a return. But this is not very normal. You're not going to see it in real life, because in real life whatever input you give, there is always some waste. During the process you lose some unit, so it's not going to happen. But the question give us some information so that we understand every single steps. So in process 2 we have an output that is 1000 unit. So 2 process 2, and actual input is 1000 unit, actual output is 1000 unit, there is no loss. And the value is how much? 110,000, because 110 per unit for 1000 unit, it will be 110,000. Now the debit side and the credit side has to be equal. So we can see we have a 1000 unit for the material, you can see here, and the cost, if I added all of this 40, 50 and 20, that gives me 110,000. And the actual output for the process 2 is 1000 unit and per unit is 110. If I multiply that, that gives me 110. So we said 1000 unit and the cost is 110,000. That's it. So all we need to do, we need to provide all this overhead cost on the left hand side, and we have to give the breakdown of this cost on the right hand side for the process 2. If there is a loss, it will come here. If there is abnormal loss, come here. If there is a gain, that will come to the debit side. We'll see later on. All right, so let's move on to the next question, maybe normal loss. So let's have a look. The normal loss is the expected loss during the process. So during my process of making the product, if I expect any loss, that is called normal loss. So let's have a look. One example for the normal loss. So this time we are doing activity 2, but we are following the information from activity 1. So the question is saying process account normal loss, input and cost are the same as activity 1. So the overhead cost is same like activity 1. Losses normally account for 10% of input. So whatever input we make in the machine, 10% is wasted, and actually output is 90%. So if you remember, the input was 1000 unit. So if loss is 10%, that will be 10 unit. So actually output will be 900 unit. So the question tell us output was 900 unit. Okay. On the requirement, we can see they said calculate the cost per unit the way we did before, but this time we have a normal losses Complete the process 1 account, assuming all scrap unit have a scrap value of 20 each. So they are saying 100 unit that was lost, and this 100 unit I can sell it for 20 pound each. So anything that is waste during the process, if I can sell it for any money, we call it scrap value. So scrap value, there's a 20 per unit. So now we need to calculate the cost per unit. So let's do that. The formula we already know. So we're going to use the same formula. So let's do this one. We said total process cost, total process cost minus scrap value of normal loss, scrap value of normal loss. If there is a no scrap value on the question, you don't have to do it. But if the question said there is a scrap value, then you have to do it. And on the bottom, we have unit input, how many unit you input for the process, and minus the normal loss. So this formula you have to remember. There is few formulas from this chapter that you have to memorize. So the first thing we need to know how much was the total cost for the process. If you remember from the last question, we had 110,000, and the value of the scrap. So how many scrap? They said 10% will be the normal loss. So from 1000 unit, if 10% is the normal loss, that will be 100, isn't it? And obviously, how much was the cost per unit? You have to calculate that as well. So of course, so we need to calculate few things here. The first is like how much will be our value of the normal loss, and how much will be the value of the output, and how much will be the cost per unit. So this is the 100 unit, and if you remember, the question said it is 20 pound each. So 20 times 100. So basically, the value of the scrap value will be how much? 2000. This is the one we need. The next one we need, that is how many unit is wasted. That is 100 unit. We already know it, 10%. So let's you can do that now. We have the cost 110,000. From here we minus 2000. That is scrap value. And after that, the input unit is 1000. From here we minus the 100. That is the waste during the process. So if we multiply that with that, divide with that, so that will give us how much? 120 per unit. So we said cost per unit 120, so 120 per unit. Now have to split this cost on the process one. The left hand side is same. Remember, the left hand side is only the overhead, and if there is any abnormal gain, the loss will be always on the credit side. So we have a only normal loss and the process 2. So you can see if we have normal loss 100 and the total output is 900, that makes me 1000 unit. So this 1000 unit, what was the input? Basically on the other side, this is the breakdown of that. So what happened with the input? Is everything as output, or some of the unit is a loss? What it is? So basically this is the breakdown of all of this. So we said 100 is the normal loss, and for process 2 the output is 900. So 100 unit, the value we have calculated, that is 2000, because the question said 20 per unit. For the 900, we already know that. So 900 is the actual. So 900 times 120, and that will gives me 108. And if we added this two, that should give me the same amount, 110,000. And if I added this three, that should give me the same amount, 110,000. and that is for 1000 unit. So at the end, the debit side and the credit side has to be equal. So in this time, the last time, if you remember, we never had any normal loss, but this time we have a normal loss. So the 1000 unit have a breakdown now. 100 the normal loss and 900 is the actually output. That's the scrap value account. Obviously it is just to show like how you value the scrap. So you sold 100 unit for 2000 pound and you cash received 2000 pound. That's it. All right, so let's move on to the next question. The next question, we have abnormal loss and abnormal gain. So let's have a look how we calculate the abnormal loss. That will be basically unexpected loss. So let's try this question. Activity number 4 says process account abnormal loss. As per activity 2, so we are following the last activity. So all this information we have activity 2 still following for activity 3. But output to process 2 is 880 unit, not 900 unit as expected. So can anyone tell me how many unit is the abnormal loss here? How many unit we have abnormal loss here? Very well done, Paul. Very well done, Daniel. Daniel is not 100. It should be 20 unit, isn't it? So out of 1000 unit, out of 1000 unit, 100 unit we have normal loss. Then actual output, the question said 880 unit. Actual output. So how many unit is the unexpected? The 20 unit, isn't it? That's the abnormal loss. Normal is 100, output is 880, so 20 is missing. So 20 is the unexpected loss, that is abnormal loss. Okay, very good. Very well done, Mohammed. Very well done, Theodora. Very well done, Nadia. Yes, we have the right answer. That is 20 is the abnormal loss. Okay, now the next question is how much will be the cost per unit? Can we follow the same formula to do it? So we said 110,000 is the cost, 2000 is the normal loss, 1000 is the input, and 100 is the normal loss unit. So our cost per unit is still 120. So we said 120 per unit. But this time, our process 1, the distribution will be a little bit different. So this side is same anyway, only overhead. But this time we have a normal loss and abnormal loss both. So we have a normal loss that is 100 unit, abnormal loss we have a 20 unit, and the actual output is 880. So all you need to do, you need to multiply with 120. Now this 100 have a scrap value that is 20,000, 2000, you already know that, because if you remember the first question, the second question, they said every scrap value, the unit is 20 pounds. So this one from the question. Now 880, so we need to multiply by 120 that we have calculated, and 20 unit we have to calculate 120. So that will give us the value for the process 2 and for the abnormal loss. So if you multiply 20 times 120, that will give the abnormal loss, that is 2400, 2400, and 880 times 120, that will give you the total process cost for the process 2, because this is my actual output. How much it will be? 880 times 120. So 880 times 120, that will give you 105,600. That's it. So obviously that's how we can complete the process cost. Now we have a 1000 unit here and the cost is same, 110,000, 110,000. All right, so let's move to the next one. The next one we have, that is abnormal gain. Abnormal gain is, that is like after the expected loss, maybe my expectation was 80 unit, but I have 85 unit actual output. So if this is the result, if I produce more than the expected, that is called abnormal gain. So let's have a look at that. Continuing with the simple example, same example from the activity 2. So we're still following the same example from activity 2, but output to process 2 is 920 unit, not 900. So you see that this time it is 920 unit. So if you remember, our plan was that time, um, our plan was 100 will be lost and we have 900 unit here, but actually now we can see it is not. So we make more than we have expected. So from 1000 unit, we have expected loss, normal loss 100. So our plan was we're going to actually make 900. That was my expected output, isn't it? But the actual result, we can see the actual result is 920, isn't it? So actual output 920. So how many unit we have produced extra? How many unit you have produced extra? So we had a expectation it will be 900, but actually it is 920. So our actual gain, abnormal gain, is 20 unit. Remember, it is not 120. So the normal loss is expected loss. We already know the loss will be happen during the process. But if happens something very unexpectedly, that's the loss you consider. You don't consider something that you expect. So abnormal means it wasn't the plan. 100 unit will be lost. You already know that. So it is not the one you consider. So you consider that one is basically abnormally gain. So that is 20. Very well done, Luis. So let's have a look. How can we sort it that? So we need to calculate the cost. So how can we do that? How much will be the cost per unit? So we'll have the same formula. We have the total cost 110 and the scrap value 2000. On the bottom we have 1000 and 100. That will be still 120 per unit. So that will be still same. Now we need to see this quotient abnormal gain is this time. Remember that abnormal gain will be on the debit side. If there is a loss, that will be on the credit side. If there is a gain, it will be on the debit side. So let's have a look. 1000 raw material we put, and we can see 20 is a abnormal gain. So the value of the 20 will be how much? 20 times 120. That will give you how much? 2400. So 2400, we write it down here. And after that, the normal loss. On the normal loss, we have 100 unit. And on the process, we have 920. And if you multiply by, this is fixed 2000. If you multiply by 920 times 120, that will give us 110, 400. Thank you, Julia. So that's all. So we can see now 920 plus 100, that gives me 1020. If I added this two, that is 112400. And here we have 110 plus 2400, so that is 112400. That's it. And here we have 1020. So both side has to be equal. Both side has to be matched. All right, so let's have a look. The question from Adil. Um, Debit side, what go to the credit side in table 1, and why normal gain goes on the debit side. Is it not our income? Okay. The first thing is you do not mix it up with your ledger account with the journal here. So this is a process account that is completely different thing, Adele. So you don't see this is the income or expense. So you don't mix it up with that. You don't have to go there. So if you go there, there is a lot of thing you have to understand. There is a few process involved here. So you don't go there first thing. The simple way to do the process account is because there are a few process involved. You see the next chapter, you have more difficult thing. So I would say make it very simple on the debit side. So on the debit side, you record only the overhead cost. So all the overhead cost you recorded on the debit side. All the overhead cost you record on the debit side, number one. And number two is the breakdown of the input you record on the credit side. So basically, the breakdown of your input you record on the credit side. So let's say if we have this 1000 unit, what is the breakdown of 1000 unit? So if there is a loss, remember it will come here on the credit. A loss will come to the credit side. And if there is a gain, it will come to the debit side. That's all you need to remember. So the debit side will be all the costs, the expenses, and you give the breakdown on the credit side. Now, if you want to understand the journal, I can recommend you something, but that will be a bit tricky. So maybe if you need to know how the journal works for that, I can send you a completely different journal formula for that. I can email you if you want to, but I would say like don't go that detail inside for the time being, because are a few things you need to understand in from the later chapter as well. So maybe you will be clear after that yourself, or maybe if you read the chapter you maybe understand. But if you even if you still confused, I can send you how the journal work for the process costing. But for the time being, make it very simple. Debit side only the overhead, and credit side the breakdown of this overhead, the actual output, the process two. And if there is abnormal loss, it will come to the credit side. If there is abnormal gain, it will come to the debit side. So just remember for the time being that the journal, the question didn't ask for the journal. Don't have to worry for the journal for the time being. So I'll move on, and maybe after doing the next chapter, maybe you have start making more sense because there is a lot of process involved. Okay, so let's move on to our next step. The next chapter will be the addition of this chapter. So the next chapter will be our process costing, but this time it will be a WIP, work in progress. So this time, some of the product at the beginning of the lesson, I have said some of the product will be still in process in the machine. So it's not completed yet. It's not the waste. It's not the loss, but the product itself is not completed yet. So the product is still in the process. It still is going to be ready. It's not ready yet. It's going to be ready. So if this is the case, we called it WIP, work in progress. Now, this all of this raw material is a part of inventory valuation. If you already done your advanced bookkeeping paper, you have some idea about all of this process costing. But if you never done advanced bookkeeping before, still there is a not much problem here, because you'll do the advanced bookkeeping anyway. But if you've done all the advanced bookkeeping, I'm sure all of you know how the journal work for the process costing. So the WIP we value using the valuation method we have for the inventory. And I'm sure all of you remember the inventory valuation method. That is your FIFO, LIFO, and the AFCO. So FIFO is the first in, first out. LIFO is the last in, first out. And AFCO is basically the average. In AFCO, you don't have to worry about what was the opening inventory and what was the closing inventory. But if we use FIFO and LIFO, so we always follow the steps. The FIFO says like what material we have received first, we'll issue that material first with that price. On the other hand, the LIFO said which material we have received last, we're going to issue this one first. So if you didn't remember your FIFO LIFO, you can go back to your chapters, you can have a look, but it's not very important even if you don't remember. I just quickly refresh your mind so that you remember there is a three method of the inventory valuation: FIFO, LIFO, and AFCO. In this chapter, obviously, it's a raw material, and raw material is a part of the inventory. So, of course, when you value the raw material, that means we are actually valuing the inventory. And when we value the inventory, we have to use this three method, that is FIFO, LIFO, and AFCO. Normally, the AFCO is not very, the LIFO is not very common technique used by the companies. The most used technique used by the companies is the FIFO. If you ask me how many company follow FIFO, I would say more than 90% company in UK they follow FIFO. 10% company maybe use AFCO, but none of them use the LIFO. LIFO is a very unlikely it will come to the exam, so you don't have to worry about it, even if you don't have much idea about LIFO. So let's have a look what we have in this chapter. So we have a few work in progress, and the first work in progress we have, that is a closing work in progress, closing WIP, and we have a opening WIP. Now I'm sure all of us we know that whatever is the closing for the last period is the opening for this period. Whatever is the closing for this period is the opening for the next period. I mean, whatever was the closing for the last month is opening for this month. Whatever is the opening for this month is the closing for the next month. So if I have something is a closing this month is opening for the next month. So the reason I'm explaining to this thing to you again, I know it's very simple, but you have to remember if the question said actual output is 1000 unit, so if the question said actual output is 1000 unit, and if the question mentioned the opening inventory, so opening WIP is 200. So if the opening is 200, and if the output is 1000, so that means actually we produce for this period only 800, not 1000, because we already had 200 unit from the last period. So it's not we made 1000 unit for this period. So whatever is the opening we have to minus. So we said 1000 minus 200, so 800 is the actual production. I hope you understand that. And the next thing is the closing work in progress. So this one is the leftover on your warehouse. So let's say if the question said you have a closing work in progress 100 unit, that means you have to add 100 here, so that actually you make 900 unit. So when I make 900 unit, what is the situation here? The situation is I had 200 at the beginning and I make another 900. So actually total I have 1100, and from 1100 if I sell 900, so 200 I have on the stock. That's the closing inventory. Whatever I couldn't sell, whatever I have in the stock. So what we understand, opening we need to always minus from the production to get the actual, and if we have something closing we have to add with the actual output so that we understand how many actually we make. This will be a very tricky part, so make sure you do enough practice to calculate that, especially for the FIFO. All right, so let's move on and have a look what we have in the chapter. The next point I'm going to discuss, I already discussed before, but still I want to say again, this is equivalent unit. Now, equivalent unit means it's not a complete unit. Let's say we have a two eggs. We have a two eggs, and both eggs are half. So both eggs are half empty. We have only the half. So we have two eggs, and both eggs are half empty. Now, if I said these two eggs are equivalent to one egg, so EU equivalent unit exactly the same thing because both are half. If I added both, that will be equivalent to 1. This is the reason we are using the word equivalent. Equivalent means it is like. For example, if you have £10 and let's say that £10 is equivalent to €12, let's say €12. So €12 is not a pound, but it is equivalent to £10. So equivalent, when we have a unit, it is not fully completed. So we basically try to make it together and try to estimate how many unit I can make from that unit. That is called equivalent unit. Now, for the equivalent unit, we have to have some completion, and the question will tell us how much the portion is completed for the material. Maybe the question said material is 100% complete. That means inside of this machine, whatever material is need is 100% complete. So you don't need any material anymore. So the material is fully completed, it's ready to go. But maybe the labor is 60% complete. That means we still need 40% labor. So 60% complete means we need 40% more. And let's say the overhead is 70% complete. If the overhead is 70% complete, that means we need 30% more overhead. So try to remember that when the question said for the opening inventory 60% complete, and let's say the unit is 50, we do not multiply by 60, rather we multiply by 40% because this is the one remaining. Because 60% is already completed, we don't multiply by the 60% because it's already completed. We need to know what is the remaining percentage. So we need to know what is the work in progress. Whatever is completed is fully completed. We don't need any material anymore. So we look for the difference. Let's say for the overhead, we multiply by 30%, not the 70. Okay, so let's move on and try to understand one question. There is a few examples here. It's a very, very good example, and there is a different explanation, like different type of completion. Please read yourself. Even the last week I have said all of you try to read the chapter in advance. It will be very helpful to understand. Okay, so let's read this question. Activity 1, process account closing WIP. So closing work in progress. The following are introduced into process 1. Okay, we have a material, we have a labor, and we have overhead. So 1500 unit is the material, that's the input. So I put 1500 unit of the material inside of the machine, and I want to see what's going on from this 1500. So you can see here they said the closing work in progress. The closing work in progress is 50 unit. The closing work in progress is 50 unit. So on the machine, we have 50 unit left and completed as belows. So the material is 100% complete. So we don't need any material. Material is 100% complete. Labor is 60% complete. Labor is 60% complete. So labor is 60% complete, 40% left. overhead 30% complete and 70% left. There are no losses in the process. Finish output is 1450. That's the actual output. So finish output is 1450. That's my actual output. So we can see 1500 I put in the machine. So let's in the machine I put 1500 kilo and 1450 come as the actual output and 50 come as a closing inventory. So there is no loss. I put 1500 kilo, the output is 1500 kilo. So this is very wonderful. We don't have any loss. But this 1500, the 550 unit we have, that's for the closing. This one we have some of the overhead and some of the labor is not fully completed. So labor is 60% completed and the overhead is 30% complete. Now this is the closing. Remember that closing means my month is end, my period is end, my year is end. This is left on the warehouse as a closing. So whatever is completed, 60 or 30%, so that means up to this percent is completed. But we don't need to do anything for this period because the next day, tomorrow, it will be as opening inventory. And that time we have to add 40%. And here we have to add 70% to complete the product. Materials is already 100% done. We don't have to do anything with the materials, but the labor we have to add more 40 and the overhead for more 70. That's for the opening. So next day I have to add this percentage to make it done. But for today it is closing. I don't have to do anything. Okay. So let's do this question. Try to do it slowly so that we understand it. They said follow the instruction to below, complete the table. So we have few steps here. You can see we have a complete the process account as far as possible, add it to its complete part C and D. So they asked you to do this one and add to it as to your complete part C and D. This kind of the link. So we have the first thing, we have the process. Then we have complete the statement of equivalent unit. We have to do that. Then we have the cost per equivalent unit. So cost per equivalent unit. So we have to divide the total cost with the equivalent unit. That will give us that. And that the question mentioned two decimal places. We have to do that. Then we have the value of the finished good. So there are a few steps is involved here. So you have to calculate A, B, C, and D. So let's try to identify how much we can do. So the first thing we need to know the material, how many unit we have for the material. Let's write it down, little bit information in the corner so that we can see it. So we have a raw material that is 1500 units and the cost is 12,975. Then we have a labor that is 9,576. Then we have overhead that is 3156. That's my total process cost. And on the WIP for the closing, not for the opening, remember that opening will give you more stress. We'll see the next question, but we have a closing this one 50 unit. So we have a raw material 100% complete, so nothing need to do. Labor 60% complete and the overhead 30% complete. Actual output 1450. There is no loss. Okay, let's move on to the question now. So we need to fill all this information here. So the raw material, this one you already know, just all this overhead cost will come to the debit side. So on the left hand side, I will not rather say debit, I will say on the left hand side. That will start making more sense to you. So you have 1500. The cost is 12,975. So 12,975. Labor 9576. So 9576. And the overhead 3156. All right. And we need to see how many is the actual unit. That one is 1450. The question state actual production is 1450, and the closing WIP is 50 unit. This is the main thing. How much will be the value for 50 unit? This is the main trick we have to do. So this is the main calculation we have to do to identify the value for this 50 unit. So this 50 unit will be our main concern, how to identify the value for this 50 unit. Okay, so let's calculate fast before we going to an evaluation. Let's calculate our statement of the equivalent unit. So finish good. So finish output 1450. So we said 1450 is the finish 1450. So for material 1450 is fully complete. For labor 1450 fully complete. Overhead 1450 fully complete. Only the issue with our closing work in progress, that is 50. Now the question said out of this 50 unit, for the material it is 100% completed. So material 100%. So I said full complete. So 50 unit full complete. For the labor is 60%. So we have to calculate what is the 60% of that. So that is 30. So 60% for 50 times 60%, that gives you 30 unit. And the overhead is 30%. So 50 times 30%, that gives you how much? 15. That's it. So we have to calculate what is the portion of completion. So I said the material is fully complete, so that is 50. So from the closing inventory 50 unit, material is fully complete. So in one unit we have a three side. Let's say this is a product. In the product we have three things: material, labor, and overhead. So we need to complete everything 100% so that we can say it is a complete product. If something is missing, we have to see what is the percentage is missing, and we have to value based on the proportion. So material is 100% completed, so 50 full unit complete. The labor is 60%, that is 30, and the overhead is 30% complete, that is 15. So let's make the total now. So total is 1500 unit. For the material 100% is completed, so full 15. For the labor 1450 plus 30, that is 1480. For the overhead 1450 plus 15, so 1465. Try to understand. If you have any question you can ask me. We are going really slow, and I want all of you to understand this. It's very simple, but is sometimes can be make you stress because it's kind of tricky as well. So make sure if you understand it, it's not going to be difficult. The next point we're going to do cost per equivalent unit. Cost per equivalent unit. So now we have to know the cost. How much is the total cost for the material? How much is the total cost for the labor? How much is the total cost for the overhead? So for the material, the total cost we have 12,975. So we said 12,900. So 12,975. We have to divide by 1500 because material is fully completed. Material we have fully equivalent unit is full completed. So cost per equivalent unit, how much it will be? 8.65. Thank you, Tidora. The next one we have a labor. How much is the labor cost? 9576. 9576 divide, we have 1480, so 1480, and that gives me 6.47. Finally, you have overhead. So the overhead we have 3156 divide 1465. That gives me 2.15. Now if I added this 3, that will give me the total cost for one cost per equivalent unit. So if I added material, labor, and overhead, that will give me the total of one unit. And this one I have to multiply on the top, isn't it? So 17.27. So now I know the value to 7. Now I know the value of one unit. So 17.27. Thank you, Theodora. So now we know the value of one unit of the equivalent. So let's complete the next section. So the next point we have here, the value of the finished good. So let's calculate the value of the finished good. So let's move on a little bit down. And can I do it here? Yeah. So we have the material. The material we have 50 unit. So we are only calculating the WIP, work in progress. So 50 unit times per unit material was 8.65. That gives me the material. Then the labor we have a 30 times per equivalent unit was 6.47, and the overhead it was 15 times per equivalent unit was 2.15, and that will give me the total value of the closing inventory. So if we do 50 times 8.65, that will give me the material. So 50.8, 50 times 8.65, that will give you 433. And we have 30.6.47, that will give you 194. And the last one we have 15 times 2.15, that will give you 32. And this is the value of the total closing inventory, and that is 659. We can make it round, Theodora, so it will be 659. All right, now if you go back to the top to complete our top section that we have done before, so we said the value of the 1450 unit, so 1450 unit, and the one we have calculated before, so that will be 1450 times by 17.27. That will give you the total for the process 2 value 25042. So 25042, and value for the 50 unit we just calculated that 659, and that will give us the total. The question said make it round. If there is a difference, the question said make it round. So let's do the debit side first, the left hand side. So on the left hand side, the unit is 1500. If I added these three, how much it will be? 12,975 plus 9576 plus 3156. So we have 25,707, and we have to write the same thing here, 1500 and 27,707, and the difference you make it round. So if there is any difference, just make it round. With the question said make it round, so you need to find the difference. So it is 6. Thank you, Theodora. So the 6 is the difference, just make it round. So you can see few steps are involved to complete the process costing. So first you need to identify what is the portion of the completion for the closing inventory. Then you have to split it based on the question mentioned. After that, we have to find the cost per equivalent unit. So you have to find how much is the equivalent unit from this table. And after that, we have to get the cost per equivalent unit. So we have the cost and we have to divide by with the unit. That will give you the cost per equivalent unit. If you added all of this, that will give you the total cost for 1 unit per equivalent. And when you multiply with the process 2, you use that. And after that, you find the value for your closing inventory and you follow the same steps. That will be like how many portion is complete. And for the material, you use material. For the labor, you use labor. And the overhead, we have to use the overhead. And that will give us the value for the closing WIP. As you can see, this question will not be very easy to understand quickly. So you need some revise, you need some practice anyway, so make sure you do enough practice for this question. So the next one we'll do, we have one more question from this chapter that will be for the opening and closing both, and that will be more tricky even. So we'll do it, of course we'll do it, and I want like when you do it, after that you can revise yourself again. So let's take a break first, and we'll come back, and after that we'll start from activity 2. So I'll see you in 30 minutes time. So we're going to start in 8 o'clock. So in this activity, activity 2, we have an opening WIP, that is work in progress, FIFO, and we have weighted average method, that is AFCO. So remember, as we said at the beginning, opening WIP is not that what is left uh, to complete, but this is basically the one we have from the last period. So opening is something come from the last period. So whatever was the closing for the last period is the opening for this period. That means if we have 60% complete, for example, the labor, if we have 60% complete the labor opening inventory, that means we need to add 40% more to make it 100%. If we have overhead 30% complete, that means we need to add 70% more because it is the opening inventory. The last one we have seen closing inventory. This time we are seeing opening inventory. Okay, let's read this question. So we have a raw material. Um, the total unit we can see 2050. The cost is 22,550. Then labor 16,304. Overhead 8212. The opening WIP, it is 50 unit and the value is 610. This is the breakdown of the 610, how we end up with the 610. So material is 100% complete, labor is 60% complete, overhead is 30% complete. That's fine. Output is 2100 unit. So 2050 plus 50. So 2050 plus 50, that will give you 2100 unit. There were no losses. So in this question, there is no loss. So let's have a look. What is the requirement? We have a two requirement. The first one is for the FIFO and the next one is for the AFCO. So let's have a look the FIFO one. How can we do the FIFO one? The first thing we need to calculate is statement of equivalent unit. So we need to see what is the difference between the opening inventory and the actual output. So opening and the good started and finished, that is the actual, and the total output, that is 2100 unit. And we have to see equivalent unit is material. We can see it is 100% complete. Labor 60, so 40% left. We're going to calculate the 40% here, and overhead is 30% complete, so 70% we're going to calculate. So this time it is not a closing. We're not going to multiply with 60, we're going to multiply with the 40, because the 40% we need to complete the opening inventory. So when you see the opening, it's not what is already done, it's what is already left for you. Well, how many percentage you need to complete. All right, then we have the cost per equivalent unit. So input cost, then we have the equivalent unit, cost per equivalent unit, total cost per equivalent unit. We know how to do it. Then the weighted average. Weighted average is quite easy because we don't have to see the LIFO FIFO. All we need to see how much is the good output and the opening inventory cost plus the input cost, total cost, then equivalent unit, it will divide by per unit. That will give me the total cost per equivalent unit. All right, let's do this one. Let's write it down the information in the corner so that we can see it when we scroll down the pages. So let's say raw material 22. So you have raw material 22,550, 22,550, labor 16,304, and overhead 8212. Then raw material unit 2050, the closing WIP 50 unit, that's not closing, that's opening, so opening WIP. Then you have material that is 100% complete, labor 60% complete, and we have overhead 30% complete. So for the labor we need more 40% to complete the full unit. For the overhead we need 70% more to complete the whole unit. So that's fine, let's move on. Okay, so we'll do fast with the FIFO. Opening WIP, so we have total 50 unit. Opening inventory, good started and finish, basically the actual output, that is 2050. And if I added that, my good output total is 2100. So out of 2150 I receive as opening, that come from the last period, and for this period I have started and finished 2050. Now we're going to see for the equivalent unit how much is completed for what. So this opening inventory 50, the material is 100% complete, so 100%. So for the material we don't have to do anything, is zero, is opening. Remember that it's not a closing, it's opening. So it's like how much work still I need to do to complete the unit is opening, because last year closing is opening for this period. The labor was 50, and how much is already completed? 60% is already completed, so I need 40% more. So 40% more I have to do, so that will be our 20. And now 50, I have overhead that is 30% done, so I need more 70%. So 50 times 70%, that give you 35. So this is the opposite of the closing WIP. So 20 we have for the labor, and for the overhead we have 35. So it's like what is the work is still left to complete the unit. This one is for material, good started finish 2050, 2050. This is fully completed unit. Only the 50 unit is like the WIP is not full completed, so we have to calculate that. So we have this one 2050 for the material. For the labor we have 2070, and for the overhead we have 2085. So this is basically the equivalent unit. Now we have to identify the cost per equivalent unit. So let's go down for the next box and try to find the cost per equivalent unit. The cost per equivalent unit, first we need to identify how much is the cost, the input cost from the quotient. So for the material it is 22,550, 22,550. For the labor 16,304. For the overhead 8212. The equivalent unit we have calculated here, that is 2050 for material, 2050 for material, 2070 for labor, and for the overhead it is 2085. That's it. And after that we have to make a divide to find per unit. So 22,550 divide 2050, that will give you the cost per equivalent unit, because that's my total cost and that's my total equivalent unit. So if I divide, the cost will be the top and the equivalent unit will be the bottom, and if I divide that, that will give me the cost per equivalent unit. So for the material, that is 11, and for the labor, how much is for the labor? 16304 divide 2070, so that will give us 7.88. And the overhead, 8212 divide 2085, that will give me the overhead per equivalent unit, that will be 3.94. All right, thank you, Alicia. So this is basically our cost per equivalent unit. Now the question said how much is the total cost per equivalent unit. So all I need to do, I need to add all of this. So this plus this plus this will give me the total cost per equivalent unit. So 11 plus 7.88 plus 3.94, that will give you 22.82. Thank you, D. So 22.82, this is our cost per equivalent unit. This is for the FIFO. Let's move on to the next one. The next one we have for the AFCO, weighted average. This is quite simple. All you need to do, we have to know how much is the actual output. So good output, that you already know, 2100 unit. So at the actual output 2100. We don't have to worry about the like what is the completion here, because in the AFCO method we calculate only the average, so you don't have to really worry what is the completion. So let's scroll down and see what is the information we have. So here, okay, so we have the opening cost. So the opening cost is from the quotient. So if you go back to the quotient you have for the opening cost, so we have 400 for the material, for the labor we have 180, and for the overhead we have 30, so 610. This is the opening WIP cost. So let's go back. So let's write it down. The opening WIP cost 400 for the material, for the labor 180, and for the overhead 30. Then we're going to input the cost. How much is the cost during this period? So that is 22, 16, and 8212. So input cost 22,550, and we have 16,304, and we have 8212. That's my cost during this period. If I added these two, that will give me the total cost. So 400 plus 22, so that will be 22,950. 22,950, then 16,304 plus 180, that will give you 16,484. Then 8212 plus 30, that will give you 8242. All right, now we have to find the equivalent unit. So equivalent unit is 2100, because this is only for the weighted, is same for all the units. So 2100, 2100. If it is a FIFO, we have to see the completion percentage. If it is FCO, we don't have to do anything. We just need to see what is the total output. Now we need to do the divide. Can we do that? So material, labor, and overhead. So it's very simple. All you need to do the cost divide the equivalent unit, that is 2100 for all of this cost. Okay, the first one, we have 22,950. 22,950 divide 2100. So that will give you 10.93. Very well done, Alicia. So the next one, we have 16,484 divide 2100. So that's for the labor, and that's give you 7.85. Very, very well done, column. So 7.85. And we have the next one, we have that is 8242 divide this. So okay, let me check if someone mic is on. All right, the last one, we have the overhead. The cost is 8242 and the equivalent unit is 2100, and that gives you 3.92. Very well done, Mohammed. So now all we need to do, we need to we need to add these three to find the total. So 10.93 plus 7.85 plus 3.92, that will give you the total cost per equivalent unit, and that will be 22.7. All right, Annie, that's not a problem. I can show you from where it is coming. It's on the question. I'll show you here. You can see it. So material 400, labor 180, and the overhead 30. The question tell us this information. All right, so that's it for this question. But as I said, this question can be tricky. It's not difficult, but can be tricky in the exam. So make sure like you done some practice. Don't just depends on the class. You need to make sure you need to do your revision, and don't wait it until the last day or like before the exam. You need to revise now so that obviously like you feel more comfortable. Yes, Wasim, in the exam you'll given the template. You don't have to make the template by yourself. So the template will be given in the exam. All right, is the end of the chapter. So let's move on to the next chapter. The next chapter we have chapter number 10. So that is the budget, flex, fix and flex budget. That's quite easy chapter to be honest, because in budgeting we have a lot of chapters, especially when you move to your level 4. You will see we have a paper that is called management accounting costing. Obviously like the management accounting costing, we have here, we just do the calculation. But in level 4 you have two paper for the management accounting. You have management accounting costing for the decision making, and you have one for the budgeting. So we have the full paper, so we have the whole book for only for the budgeting. So obviously you have a lot of budget, like incremental budget, you have a zero based budget, you have a flex budget, you have a fixed budget, you have a rolling budget. There's a lot of budget you're going to learn from the first book you're going to read in level 4. So that will be like a lot of thing about the budget. But in level 3, all you need to see, we're going to see like some simple calculation, like the difference between the fixed and the flex budget. Now, the difference between the fixed and the flex budget is fixed budget doesn't change with the activity level. Activity level means the unit. So the number of unit we produced, the number of unit we make, it doesn't affect the fixed budget. For example, let's say if we make like one pen, the rent is £5,000. If I make 5,000 pen, the rent is still £5,000. So the fixed cost, the fixed budget remains same. Doesn't matter like if I make more unit or if I make a less unit, my cost remains same if I use the fixed budget. Now, fixed budget sometimes doesn't make any sense because if my activity is low or high, my cost remains same. But sometimes some organization they think like I have to pay the cost anyway. So if I use the building or if I don't use the building, I have to pay the rent anyway. So fixed budget is the difference between how much the cost, obviously I had a plan, and how much is the actual cost. So the fixed cost is basically the fixed budget is the difference between the fixed and the actual. But on the other hand, we have a flex budget that is more interesting, flex budget, and that is more widely used. So most of the company, I would say everyone, they follow on the flex budget. The flex budget is changed with the activity level. It's changed with the activity level. So based on the plan, the cost will be changed. For example, let's say, um, let's say in 1 hour, let's say in 1 hour, we make 10 unit. In 1 hour, we make 10 unit. Now, let's say one day you have spent it 1.5 hour and you make 20 unit. So you have spent it 1.5 hour and you make 20 unit. Now, your manager will tell you, listen, let's say per hour is 10 pounds. So 10 pound times 1, that is 10, and 10 pound times 1.5, that is 15. So now if your manager tell you, why did you have spent 15 pound for the salary, for the wages? Because our plan was to spend 10 pound, but you have spent it 15. So 5 pound is the adverse variance. So if the organization follow the fixed budget, they will show 5 pound as the adverse variance. They'll say it is a bad for the company because we had a plan to use 10 pound, but we have spent it 15 pound. Now if the manager become angry on you just to spend more hour, then you will be tell your manager, listen, even if I have spent it half an hour more, but do you see how many unit I make? In 1 hour I supposed to make 10, but in 1 hour, 1.5 hour I make 20 unit. So in half an hour I make double. So I supposed to make 10 pen in 1 hour, but in 1.5 hour I make 20. So I did really well. So from your point of view, you did better because to make 20 pen it should take 2 hours, but you make by 1.5 hour. But if you use the fixed budget, then it's not good because the company will find you as adverse variance because the wages cost will be £5 more. Now, that's why if you do the flex budget, what will happen? In the flex budget, you don't follow the fixed. You said, okay, so in 1 hour, the cost supposed to be 10. So in 1.5 hours, so for the 20 pen, I should use 22 hours. I should use 2 hours. So 2 hours time 10, that should be £20 I should spend for 20 unit. But actually I have spent it 1.5 hour, £10 per hour. So I have spent it £15. So actually I save £5. So you see that's become favorable. So if you use the flex budget, your cost will be changed based on the activity level, based on the unit. But if the company use fixed budget, it doesn't affect how many unit they make, how much is the actual unit, how much is the actual production. It doesn't care about that. The fixed budget only care is the cost is more than the plan. If it is more than the plan cost or the estimated cost, then it is adverse variance. It is a bad for the company. And if it is less, then it is favorable. But the flex budget don't stick with the plan. It changed the plan because of the activity. All right, so this is the basic definition of the fix and flex, but we need to understand more. So we'll do some exercise and we'll try to understand more. So let's move on straight away. There is a lot of example you can read yourself. That will give you more understanding, but we'll move to the question straight away. So let's move on to one of the activity. And this activity we can see we have to calculate the budget. Complete the budgeted cost schedule for the three possible level of the production shown below. Calculating the cost per can in pound to three decimal place. Okay, so basically sometimes it's happened a company don't know how much will be the sale. So company said, okay, my sale could be 5,000 unit, my sale could be 7,000 unit, and my sale could be 8,000 unit. So I want to see the cost of all three levels. So that's why sometimes the management they prepare the budget based on different level, because even though you can estimate my expected sale will be 10,000 unit, but it could be a little bit more, it could be 12 or it could be 8. So they try to prepare three budget, 8, 10 and 12, so that they can see the picture. What if my actual sale is 8, what if my actual sale is 10, what if my actual sale is 12, so they can see the whole picture. Let's read this question and try to do this question together, everyone. So country soup. The marketing manager of Country Soup believes that the sales of mushroom soup next quarter will be between 350,000 and 450,000. So they are saying the marketing manager of the Country Soup believes that the sales of mushroom soup for the next quarter will be between 350 and 450. So they're not sure, it will be between 350 and 450. The budgeted cost schedule below contain the cost information relevant over this range. Okay, so they said three possible production. So what if my production is 350,000? What if the production is 400? What if the production is 450? So you want to see the picture in all three level. Okay, that's very simple. So let's do that. We already know what is the difference between the variable cost and the fixed cost. So on the note on the bottom of the question, they said depreciation, rent, and rates and other overhead are fixed cost. So this three is fixed. So this three will not be changed, even though my activity will be changed, but this three will remain fixed. So let's do this three first. 16,000. Doesn't matter how many unit I make, the cost will be same because it is a fixed cost, and the question mentioned it very clearly. Then 28,000, 28,000, and 28,000. And then we have 36,000, 36,000, 36,000, 36,000. All right, let's do the variable cost now. So this all are the variable cost. The first one is direct material. How much will be the direct material for 350? So all I need to do, we need to multiply with that, isn't it? 10p per can. So for 350,000 can, how much will be the direct material? Then we multiply with the 400, then 450. So that is quite easy. So the first one will be 35,000, isn't it? So 35,000. Very good, Annie. Very good, Kali. So the next one, 400,000. So how much will be that? So 400,000 times by 10 pence. That will give us the direct material cost. So I would say that will be our 40,000. Very good. And the last one, 450,000 times 10 pence per can. That will give us 45k. So I would say 45,000. Very well done. We move to the next one, direct labor. The direct labor is 8 pence per can. 8 pence per can. So 350,000 times 8p. So how much it will be? That will give us 28,000. Very well done. 28,000. 28,000. Then we have 8 times 400,000. So that will be the direct labor for the 400,000. 32,000. Very well done, Kelly. 32,000. Then we have 8 times 450. That will give us how much? 36,000. Very well done. Then the last one, we have the canning cost. 2 pence per can. So how much will be for 350? 7,000. Okay. 7,000. For 400,000, how much will be for that? 8,000. Very well done. And for the 450,000, the last one, 9,000. Okay, that's it. So this is the calculation we have made. It's very simple, you can see. Now we have to make the total cost. Can you make the total for this 350 first? So 35,000 plus 28,000 plus 7,000 plus 16,000 plus 28,000 plus 36,000. So 150,000. Very well done. Then we have the next one. The next one we have 40,000 plus 32,000 plus 8,000 plus 16,000 plus 28,000 plus 36,000. And that gives me 16,160. Okay. Very well done, Alicia. Very well done, Callie. Then we move to the next one. 4,000, 45,000, 36,000, 9,000, 16,000, 28,000, and 36,000. And that gives us 170,000. Very well done, Abdi. Very well done, Tidora. All right. The final question is cost per can. Cost per can. So we have the total cost and we have the total unit. So if we divide with that, 150,000 divide by 350,000, that gives us cost per can, isn't it? Because if I have the total cost 150 and if the total can is 350,000, if I divide, that will give me the cost per can. So the question said take 3 decimal place. Take 3 decimal place. So we take 3. So we take 0.429. Very well done, Kelly. Very well done, Paul. Then you move to the next one. 160,000 divide 400,000. That will give us the cost per can for 400,000. So 160,000 divide 400,000. So that will give me 0.400. Take the 3 decimal. And the last one, 170 divide 450,000. And if you divide with that, that will give you 378. Very well done, Paul. Very well done, Theodora. Yeah. So this is the one we have done, and you can see it's not very difficult. So this is very simple budget. They give it to us. So we'll move to the next one. So let's move to the next one and see is there any more tricky or difficult. So let's try to see if we can do the question here. Yeah. All right. So let's try this question. Activity 2, charter flight. Let's read this question together. The charter flight, the charter flight profit center has just revised its forecast for the number of mile as expected to fly during the next month on a particular charter contract. Originally, it expected the contract would be for the flight totaling 5,000 miles. So it was the plan. It will be total 5,000 mile. It has now expected that the total mile the total mile to be flown will increase either 6 or 7. So my plan was the cost or the flying for the chartered flight will be for 5,000 mile total. But after that, I have understand or estimated it will be not 5, it will be more than that. So it will be either 6 or 7. So I don't know it. On the notes, it says the company chartering the flight has negotiated with the charter flight a reduction on the sale price of 10% per mile and paid on all mile flown in excess of 5,000 mile agreed in the original contract. So if the customer book more than 5,000 mile, will give 10% reduction. So let's say if one flight price is 500 pound, and if it is more than 5,000, only the more than 5,000 whatever it is, they'll get 10% discount. Remember, it's not the whole 5,000. So if they fly 5,001 mile, only for the 1 mile they will get 10% discount, not the 5,000. It's excess of the 5,000. Landing and servicing fee are semi-variable. Semi-variable means is some of the costs are fixed, some of the costs are variable. Semi-variable means inside of the cost there are portion of variable, there is a portion of fixed. Semi-variable means is a mixed cost, fixed plus variable. There is a fixed charge of 600,000, so fixed cost is 600,000 plus 50 per mile. So 50 per mile is the variable. So if I have a 10 mile, I'll multiply by 10 times 50, but the 600,000 is fixed. So 600,000 plus how many miles, multiply by 50. Okay, the requirement here is use the table below to estimate the profit per mile in pounds to two decimal places of this contract at both 6,000 and 7,000. So they give us the data for 5,000 and they ask us to calculate for 6 and the 7. All right, so let's try that. Let's try to do everyone together. So let's calculate the sales revenue. How much will be the sales revenue for 6,000 mile? So first I need to know how much is the cost, how much is the sales for 1 mile. How do you do that? So 2,000, 205,000, 250,000. Remember 30 here means 30 with all of the figure. So 250,000 for 5,000 mile, isn't it? So if I divide with that, that will give me the selling price per mile, isn't it? So if my total income is 250,000 for 5,000 mile, if I divide, that will give me per mile cost. So how much it is? 250,000, 250, 100,000 divide 5,000. So that will give you the cost per mile, the selling price per mile. And after that, I'll multiply by 6,000 to get the cost for that. But there is issue here. The issue here is 10% per mile, isn't it? We have to give a discount 10 pound, 10% on the difference between the 5,000 and the 6,000. So let's calculate that first. 2,500 divide 5. So 500 per mile is the selling price. So 500 per mile is the sales revenue per mile. Now for up to 5,000, for the 6,000 I'm calculating now. So let's say for the 6,000. So up to 5,000 it is fixed. 5,000 times 500, and that gives me the same amount here, 2500. But for the another 1000, I'll multiply by 500 but times by 90%, because 10% is the discount. You can minus the 10% later on, it will give you the same figure, or you can multiply with 90% is the same thing. So taking out 10% or multiply with 90% is the same thing. So if you do that, how much it will be? So let's say it will be, we have 1000 times 500 times 90%, that is 450. 450, and we can say we have 2950 total. 2950. Let me know if anyone have still confusion how we get this. So all you need to do, you have to get per mile. How do you get it? Total for the 5000 mile is 2500. 1000 you divide with that to find the per mile, and you multiply with the 5000. We don't do it with the 6 because another additional 1000 mile they'll get 10% discount. That's the reason. All right, the next one we do the same way. 7000. So 7000, 5000 is same, so 5000 times 500, that gives me 2500. I'm not taking the 30 because 30 in the top, that means I don't have to write this. And another 2000 mile, I have 500 times 90%, and that will tell me exactly how much will be that. So 2000 times 500 times 90%, that gives me 900. So 900 plus 2500, that gives me 3400. Very good, 3400. All right, so the sales is done. Now I move to the aviation fuel. So fuel is a variable cost, it's a variable and the semi-variable. Only landing and the service is semi-variable. The question says landing and the service is semi-variable. So you only look after that. Other thing is variable. So 400,000 cost for 5,000 mile. How much will be the cost for 6,000? Very easy. So 400,000 is the cost for 5,000 mile. So if I divide, that will give me the per mile, and if we multiply it by 6,000, that will give me the cost for 6,000. So how much it will be? Can you get this figure? 400 divide 5,000 times 6,000. That gives you 480. Very well done. 480. Can you get the next one then? For the 7,000, the same way. 400 divide 5,000 times 7,000. That will be 560. Very well done, Kelly. Very well done, Theodora. So 560. Then the next one, we have the landing and servicing. The landing and servicing, the quotient said it is a semi-variable. So 600 is fixed plus 50 per mile. So we can do that. 600, we don't have to worry this 30 because 30 we have to minus anyway here. So 600 plus 50 per mile. So what we need to do for the 6,000 mile, we said 6,000 times 50, and that will give me the total cost for 6,000. So how much it will be? 6,000 times 50 plus 600. So how much it is? 6,000 times 50. Then we have, so this one we have 900, isn't it? 900. We are not taking the 30, so only the 900. And the last one, how much will be the last one? Same thing, 600 plus 7,000 times 50. And that will give you 950. So we said 950. All right. So in this type of question, sometimes you have to calculate with the high-low method. If the question said no more information, you have to use the high-low method for that. Other variable cost. So the other variable cost is 135. So the way we did before, we do the same way. So 135 divide 5,000. So 135 divide 5,000 times by 6,000. That will give you the other variable cost for 6,000 unit. So how much it will be? 135 divide 5,000 times 6,000. So that will give you 162. All right. And for the next one, for the 7,000, how much it will be? So we do the same way. 135 divide 5,000 times by 7,000. So that will give you 189. Very good. Now the rest of is our fixed cost. The fixed cost is fixed anyway. We don't have to change it. So just to follow it. So we said 420. We don't have to change the fixed cost. Fixed costs remain fixed. 625. 625. After that, we have to make the total cost. So can we add all of this to find the total cost? So 1, 2, 3, 4, and 5. So 480 plus 900 plus 162 plus 420 plus 625. So that will be my total cost for 6,000 mile. So how much it will be? 2587. And the next one we have 560 plus 950 plus 189 plus 420 plus 625. And that will give you 2744. All right. And you have to find the total profit. How to get the total profit? So sales minus total cost, isn't it? So this is my sales, 3,400 here, and this is my total cost. So if I minus the total cost from the sales, that will give me the profit. So 3,400 minus 2744, that will give you the profit for 7,000 mile. That is 656. And for this one, 2950. 2950 is the sales. The total cost is 2587. So 2950 minus 2587, that will give you the profit. That is 363. That's it. And the next point we have profit per mile. So we just need to divide with the mile. So if it is 6,000, you divide by 6,000 the profit. If it is 7,000, divide by 6,000. So for example, we have 363 divide by 6,000. That will give you per mile. You need to make sure you add 30. And the profit here is 656, and total mile is 7,000. And that will give you per mile profit. So this is 60.50. For the 7,000, it will be 93.71. All right, that's it. That's not very difficult. All right. Question from Michelle. Can you please go through the landing and service? Of course, I can. So basically, the landing and the servicing fee is a semi-variable cost. Semi-variable cost means the fixed and the variable is a mix. For example, if I said 100 pound is a semi-variable, so you need to understand some of the costs are fixed, some of the costs are variable. So you need to split it. How many cost is fixed? How many cost is variable? So the question said 600 is fixed plus 50 per mile. So for 6,000 mile, So I can say 600 is fixed anyway. So it's fixed means fixed is fixed plus. So I need to do plus 50 per mile. So I said, okay, so 6,000 mile times 50 per mile. And that's give us 900. And that is here. Got it, Michelle? So that's how we can complete this question. Obviously, sometimes this budget question come in the exam. So if it is come in the exam, make sure you get it right. It is quite easy and straightforward, except few tricky thing, but you will be all right if you do some practice. All right, the next thing we have activity 3. We have 10 minutes. Maybe you can try to do that. Let's see how much you can do. So activity 3, TV dinners. We have a company has produced 3 forecasts of activity level for the next 3 months for its TV dinners range. The original budget involved producing 5,000 batch, but due to increased demand, production level between 6 to 7 batch now seems likely. Overhead are semi-variable. So overhead are semi-variable. That means the fixed and the variable is inside. This should be calculated using a high-low method. I'm sure all of you remember the high-low method. If 8,000 are sold, total cost is this, and 5,000 is sold 16. So this is my higher unit 8,000. That's my lower unit 5,000. That's my higher cost 20. That's my lower cost 16. This is the method I'm going to use to find it out the overhead cost. All right, no worries. So let's do that. First, we do the sales revenue. Can you do it together a little bit fast so we can see, we can finish this question. Sales revenue 300,000. The same way, we need to divide with the 5,000 times with 6,000. That will give me the sales revenue for 6,000 unit, isn't it? So I said 30,000 is the sales for 5,000 unit. If I divide with that, that gives me selling price per unit. If I multiply by 6,000, so that will give me the sell for 6,000. How much it is? 30,000 divide 5,000 times 6,000. That gives me 36,000, isn't it? So 36,000 is the sales. Very well done. Can we get the 7,001 the same way? How much will be the sales revenue for the 7,000? 42,000. Very well done, Annie. Very well done, Kelly. So 42,000. Then we move to the direct material. Can you do the direct material same way? 1250 divide 5,000 times by 6,000. Very simple. 1250 divide 5,000 times by 6,000. That will give you the cost for 6,000 for the direct material. 1,500. Very well done. Very well done, D. So can I have the next one for the 7,000? How much will be the direct material cost for the 7,000? 1,750. Very well done, Annie. 1,750. Very well done. Then we have a direct labor. Same way, can we do the direct labor? 3,000 divide 5,000 times by 6,000. 3,000 divide 5,000 times by 6,000. That will give us the direct labor. This is also variable cost, so nothing will not change anyway. So 36. Can I have the 7,001? How much will be the direct labor cost for the 7,000 unit? 42. 4,200. Very well done. Now the tricky bit we have here, that is the overhead. The overhead, we have a variable, we have a fixed. So the question said use the high-low method. So I'm going to use that. I'm going to take the higher unit, that is 8,000. The cost is 2,800. I'm going to take the lower unit, 5,000, and the cost is 16,300. So the difference is 3,000. And how much is the difference here? So we have 20 20,800 minus 16,300, 4,500. So if we try to find the variable cost per unit, so the difference of the unit will go down 3,000. If I divide that, that will give me the variable cost per unit. Can I have the figure? How much is the variable cost per unit? So 4,500 divide 3,000. 1.5. So variable cost per unit 1.5. Very good. Now we have to find the fixed cost. We can pick any one, either 8, either 5. So let's pick the 8,000. So 8,000, the total cost is 20,800. I want to separate the variable cost. If I take away the variable cost, whatever will be remaining, that will be the fixed. So I said 8,000 times 1.5 is the variable cost. How much it is? 8,000 times 1.5. Can I have this one? 8,000 times 1.5, 12,000. So 12,000 is the variable cost. If I minus the 12,000 from the total, whatever is the remaining, that is called fixed cost. And that is how much? 8,800. Very well done. Very well done, Alicia. Yeah, so we know our variable cost now, so we can do that. So variable cost is 1.5 per unit. So how much will be for the 5,000? Can we get the figure? So 5,000 times 1.5, that is 7,500. Can I have the variable cost for the 6,000? So 6,000 times 1.5. And for the 7,000 again, 7,000 times 1.5. So how much we have for the 6,000? 6,000 times 1.5, that is 9,000. And for the 7,000, how much will be the variable cost for the 7,000 unit? 7,000 times 1.5, that will give you 10,500. Very good. And the fixed is fixed, so 8,800. That will be fixed for all unit, regardless of the activity level. Fixed cost remain fixed. Now we have to get the total cost. Can we have the total cost? So the total cost will be all of this, 1250 plus 3,000 plus 7,500 plus 8,800. That will give you the total cost. If we added 4 of this, that will give us the total cost for that. So the total cost is 20,550. Okay, 20,550. And the profit, how you get the profit? So total cost from the sales, isn't it? If I minus the total cost from the sales, that is 30,000, and the difference will be our profit. So can you get the profit? 30,000 minus 20,550. That will give us the total profit for 5,000 unit, and that is 9450. Okay. And the final question is profit per batch. How much will be the profit per batch? So we have 5,000 batches. So we'll divide by 5,000. That will give us per batch. So 9450 divide 5,000, and that will give you, and we'll need to take 3 decimal. Remember that 3 decimal. The question told us take to 3 decimal, so we'll take 3. So it will be 1.890. The same way we can do the next one. How much will be the cost for that? Total 1,500 plus 3,600 plus 9,000 plus 8,800. So the total cost will be 22,900. If we minus it from 36,000, the profit will be 13,100. Then here we have the total cost 1750, 4,200, 10,500, and 8,800. The total cost will be 25,250. And if you minus it from the sales, that will give us the profit 16,750. All right, so all I need to do is to divide. So 13,100 divide 6,000. How much will be the profit per batch for that? 2.183, 2.183. And the last one, 16,750 divide 7,000, 2.393. All right, so this is the completion of this cost. So obviously, like this type of question, if it is come in the exam, make sure you answer very well, because this question will give you the complete marks, and you can see it's quite easy and straightforward, so shouldn't be difficult for you in the exam. All right, so any question from here? If you have any question, you can let me know, you can ask me, so of course, like, we can discuss more. No? Very good. So make sure you do some practice, because don't just leave it, because whatever chapter you have done, 3 chapter, make sure you revise again, so that you try to understand everything. If you have any question, you have my email, so email me, I'll try to explain there as well.